Hey everyone, welcome to another video. Glad to be back. We're doing a trade recap for Asian session 22R. This was a pretty long trade. It was entered during Asian session and closed past London. So this was a long trade that I held. Now, if you've been wondering where I've been, I took about 2 months off of trading, working on another business that I have that I've been running for a pretty long time. Decided to take on some more business, and so I needed to spend some time. Figured the holidays were perfect for that as volume is low. But this was my first week back trading. So I actually had my first day back on Sunday, market open this week. Now, I traded that day and I recorded a trade recap on that that's already available in the Discord group. It was my first video back, so it's maybe a little bit rough. And we got about 35 R in 26 minutes Asian session. And so this video is going to be based off of another trade recap. I traded 2 days this week. This is basically the last day that I traded. So I traded Sunday and I traded Friday, or Thursday evening Asian session. Now, I was attempting to record a live trading session. So basically recording everything live, the entire session. I did record it. So you can see my MT5 with the entry, time frame, and me doing my markups. The only issue with this is that this video is basically almost 7 hours long. So I don't think I'm going to put that one out because it would probably require a ton of editing. So I was probably on the charts for around 2 hours, and the rest of it is kind of just recording updates as I come back to the screen. Because what I basically do is when I trade, usually once I get my entry, if it's a good one, I'll walk away and I'll come back in a couple hours just to check on it. So I make small updates. So what I'm going to do instead is I'm just going to do a trade recap. Now I do have screenshots kind of showing the entry timeframes and all of that stuff. You can kind of see. For example, this is what my entry looked like. This was the first entry that I was looking for. Price did not come back to that area. This is my actual entry. Here you can see how the target was looking right after price kind of held, right? I had a secondary entry that I set just before I went to sleep that was supposed to trigger, but for some reason, I guess I deleted the order on my phone by accident. So that order did not trigger. So I only have one trade for that session there. Otherwise, I would have had double the R because I don't set break evens. So, but we ended up capturing about 22 R on this trade, 22.9, something like that. So let's go ahead and break this down. First thing, if you wanted to see the outlook that I made for this trading session, it's already in the Discord. So I recorded a 30-minute live markup of my outlook, right? So structurally speaking, price was 4-hour bullish, very aggressive with the CPI news that we had the prior day. So usually what happens is news reactions, they don't always hold. So I was kind of hoping price would kind of pull back. At the same time, I understood that we have a lot of supply zones above that are basically magnetizing price, and price is closer to those zones. So overall, 4-hour was bullish. 15-minute was bullish as well. Let's throw on some of the 15-minute markups. I'm going to kind of explain here what I was looking for. So this is during Asian session, so obviously my markups are kind of hidden right now. I'm going to go through it as if I was trading it, kind of give you my perspective. So this is basically around 3 p.m. when I came onto the charts. Usually that's when I sit down for Asian session. What you can see here is we swept the lows, and then price pushed up, broke the high, right, very aggressively. Price came back, and what do we have? A mitigation of that wick, and then price breaks to the upside, close with the candle body closure above, right? So technically speaking, we have from this high to this low is the sell to buy on the swing, right? My thought process is that this area could be weak, and very easily we could sweep all of this liquidity and price could probably break down. Now, because 4-hour and 15-minute are bullish, I'm not willing to take shorts that are necessarily going to break all of this because that's counter to the higher time frame trend. So what I'm kind of looking for in this case is on the 15-minute, I can see where we have the last sell candle that printed. So this is the last, or the last bearish candle that printed, that mitigated. And then we have all these bullish candles that continue. Now, they did so in a very weak manner. They're not engulfing, they're not very strong, kind of, a lot of liquidity that we could sweep. So in my mind, when I see price that does something like this, we have the supply above that we're we're magnetized to, but we also have this demand below. If I see an internal change of character, for example, then what I'm willing to do is take a short-term counter trend short into a potential demand that could potentially shift price bullish and then take longs like that. So I'm actually going to break down the trade that I took. I took a counter trend short. It was counter to the 15-minute structure and 4-hour structure. So this was a quick 22, well, a very long trade, but it would have been a quick trade, 22R, right? So here what we're basically looking at is we're going to frame out the most recent swing. So we have this is a swing low, this is a swing high. The highs are considered to be targeted and weak. The lows are supposed to be strong. Now this was created during the news, so we usually don't expect these to hold very long, as news reactions tend to eventually break down. Then what I'm focusing on is if we take the low to the high, here we can see that if price is going to have to pull back, we want to see price come back into, let's say, well-priced territory. So very easily price could come down to here before it goes long. In my mind, what I'm specifically looking for is areas that have taken liquidity that could give us potential reactions to bounce off of. Here, technically speaking, we make this wick high internally, and we can see that this following candle swept the lows before pushing higher and kind of created a small gap in between here. So this is like a small demand zone that I would consider at the minimum we can expect a reaction. That's usually how I'll mark this out. So because this is the latest one that took liquidity, this wick trades lower. That's a place where I can confidently say it would be the minimum expectation for price to return to. Now that is above the 50%, and that's fine because price is very aggressive, as we can see, and there is always a chance that price might not even go that far, and it could just even be very aggressive enough to bounce like this, as price was very impulsive. So this would have been my first target. Ideally, something like this that was in premium pricing would get tapped. Now here's basically what I was doing. Looking at this on the 15-minute, I use 3 different time frames usually when I'm trading. So before I take an entry, I'm looking at 15-minute, 5-minute, and 1-minute. The moment that I take an entry or I'm looking for an entry inside of a POI, I then switch 5-minute, 1-minute, and seconds time frame. So here's going to be what the markups that I was drawing look like, and you'll be able to see them when I turn this on. You can kind of see the same ones, right? But this is to get you an idea. So first things first, on the 15-minute, the sell to buy that made this high would be the sell, and that's the buy swing. So we don't have any sell candles in here. We have a area that took some liquidity before, so we could say that we have a small swing from this low to this high. Now, in order for price to give me a 15-minute change of character externally, price would have to come back down below the 50%. And so to me, it's already going to be an invalid counter trend move at that point. So if I'm going to be aggressive, I'm going to be focusing on internal changes of character, which means that all I need to see is a failure to make a new high, right? And I need to see something get engulfed in some manner. So for example, here, this would be an internal order flow shift. So now what we have is this would be technically the higher high. Now until we take liquidity, it's not confirmed. Price can still push higher. But we have on the lower time frame is this internal point here where we pull back and then price creates this almost like a doji candle, and then we have engulfing bearish candles. We break internally. So then what I'm looking for at that moment is this. On the 15-minute, this is a visible zone that I could potentially look for shorts. Now, in here at the current moment, what I have to understand is this is counter trend. So because this does not have any inducement of liquidity, there's no visible point of liquidity on the 15-minute, more than likely this area will get taken. Usually what we're looking for is some sort of structural inducement. So for example, we might have something like this, And then what we need to see happen is another 15-minute break before we pull back, liquidate that first one, and then we would get something like this. And so ideally, this would have been the setup that we see. But what actually happened is we failed to create another 15-minute low. So what we have is something like this. In this case, usually that high will be used as liquidity. And so what we can usually find is that that gets swept before we break down price. So same kind of thing that we're looking here for. On the 5-minute time frame here, we have that. Now we also have the extreme. Now the question is, why am I looking for shorts when price is visibly bullish on the 4-hour and the 15-minute? So I'm going to teach you this trick that I use that works incredibly well for every single session. And this is just a way of thinking when it comes to structure. Structurally, even if you're counter trend, right, you should always keep in mind where the extremes of every swing are. And the reason why is because you at that current moment don't necessarily know what's going to happen next. But what you can see is that if price fails to break structure in some manner, then you can expect that price is probably going to then turn around. What that would look like is, for example, let's say price comes down, right, like this, and it's making another higher low, then price pushes up. If you see on a lower time frame, the price is rejecting to hold, or it's basically respecting a supply, even if it's not considered strong yet, it could be enough just to shift price to create some sort of short-term reversal before going higher. And so what I actually always use is this method to always look for opportunities at extremes. For example, on the 15-minute time frame here, this area doesn't have any inducement of liquidity. It has, very weak price action pushing forward, but we have a lot of impulsive nature behind that. So in my mind, ideally, I would like to see this get taken out. At the same time, I understand that, hey, if price comes to this extreme, technically speaking, right, even if it has no inducement of liquidity, if I see price holding and shifting, then I'll want to take a trade there. Same thing with this area. This is the first sell candle that printed. It's just below the supply. Price still needs to come up higher, but if I have enough to see that price is already shifting bearish at that current moment, rather than look for longs, I'm just going to be aware that, hey, if price makes it to that extreme, and that extreme is actually showing respect, I'm willing to take a trade, right? So that's pretty aggressive thinking, but in most cases, I find that it works extremely well. We're going to use this as an example. So because we are showing a shift in internal order flow here, right, this would be the next 15-minute week low. As long as that this, let's say if this area holds, then this would be the target, and then price would then continue lower, more than likely targeting this zone, or even better, a premium price POI like this extreme below. So what I do is I have framed out the extreme wicks and this internal shift. So I go to the 5-minute time frame. So now what we can do, I don't need to see this premium discount anymore. I'm just focusing on this. On the 5-minute time frame, what I observed is that here we have an inside bar. That inside bar is something that I am going to consider, being that it's a lower time frame range. And if I got a 1-minute change of character inside that area, then I could consider that to be an example of order flow shifting bearish and going to continue this internal shift to potentially at the minimum take out this low. So that would be a valid setup. The next thing that I'm focusing on is if price comes to this area, what's going to happen. Now the expectation is that this area is taken, right? So 15-minute order flow, the expectation on the higher time frame structurally would be that this goes, right? So somehow I have to see when price is going to take out that level. So what I'm basically watching on the 5-minute time frame, we're going to bar replay this. So, oh, whoops, wrong button. Let's see, sorry. Let's go back to wherever we are here. Okay, this is the one. All right, so price is coming in. Here you see when it comes in, it basically just immediately takes out that level. We don't have a 1-minute change of character in that zone. So technically speaking, there is no opportunity for a short there. If we're looking at the 1-minute time frame, a 1 minute change of character would have had to been this one. Then if price continues to go higher, see, still holding a little bit there. So once we have a new 1 minute high, then this would need to go for a 1 minute change of character, right? That would be at least the external. Otherwise, we can be very aggressive, and price, we could be looking for something like this. Now here's what I'm looking for. I understand that price is 4-hour and 15-minute bullish. So at this current moment, what I'm looking for is I want to see how price is going to take out this level, because now I'm expecting likely this area is going to go. So if this area is going to go, it's very important to me, especially during Asian session. Asian session is usually lower volume and very weak price action. So what I find oftentimes is if price is going to sweep a high, let's say on the 15-minute time frame, more than likely it's going to reverse and then break down into a valid demand. So for me, I've seen this setup many times, and I have multiple trade recaps with the same exact thing happening. So I already am keeping that in mind as an option. I want to see how price handles this area. All right, perfect. So now we've taken out this level. How is this going to look like? The question is, we can see that that's a very aggressive candle on the 15-minute and on the 1 minute. So when we see something that's very impulsive like this, usually what happens is there has to be strong follow through. So looking at this on the 5-minute time frame, you can already see that price is starting to kind of pull back. Now on the 1 minute time frame, which is where we're seeing this from, for example, here I can show you my screenshot of the trade that I'm taking. So I'm looking at this on the 1 minute time frame and on the 5-second time frame, right? So let's go ahead and go here. So when you see something very impulsive like this that takes liquidity, a lot of times this is just a last minute push. And because there's a lot of resting orders above, if we fulfill those, we'll start to see price break down pretty quickly. So we forward another candle. All right, already we're seeing some sort of rejection. That's enough for me to see an opportunity. So that's when I jump to the lower time frame, either 15-second or 5-second. In this case, my entry was on the 5-second time frame. So here's what I'm seeing. We go here. All right. So basically, this is where we came up, tapped that extreme, we pulled back, and then we made that high. So on the 5 seconds, and taking a 5-second change of character might sound incredibly aggressive, considering the fact that we are 4-hour and 15-minute bullish, and 1 minute order flow is still bullish, incredibly aggressive. So a 5-second change of character doesn't always make sense. Now here's what I'm seeing. At this current moment, what I want to see is just some sort of level of respect. On the 5-second time frame, we see that this sweeps liquidity before breaking down. Here we have a level of interaction, and then the flip is what ends up breaking. So either of these areas, if I see price pull back to here, right, on these time frames, if price is going to remain bullish, 4-hour and 15-minute and 1 minute bullish, then the 5 seconds not going to be respected. It will provide maybe no reaction, if any. So if I do see something happening here, then, and I see, let's say, another range form, then I can wait for price to pull back, and then I can take a trade. So at that current moment, looking at my screenshots here, this is the areas that I was kind of looking for my my setup. So already I'm set up waiting for an entry. In this case, let's say we use a 2-pip stop loss, which is valid. We could be able to hold both of these. So that's what I'm currently looking at. Now at the same time, I'm just focusing to see what provides a reaction to the left, if anything, right? And so I want to see something take liquidity. So then fast forward a little bit. Okay, so what do we have? Price creates a flip. So we tap this demand, price pushes up. Does it take liquidity? It could take from this small little range in here. It's a 5 seconds, so it doesn't mean much. But what I see now is that we formed this supply. Now at this current moment, we're still on the 5-second time frame. So this would be incredibly aggressive. Price could, on the 1 minute time frame, considering the swing is very long, still do something like this, right? Let's take a look again at the 1 minute swing. For a 1 minute change of character, this is what has to go, right? So this is a very long swing. If we waited for premium price reaction, it would be like all the way over here, right? So it has to be under here before it comes back. That'd be pretty aggressive. But again, sometimes that's how we trade. I understand that I'm already seeing weakness on the 15-minute and the 5-minute. So at that current moment, we're already pulling back. It shows that we're retracing, that we're rejecting, that is probably just a sweep. On the 1-minute time frame, that's what we're currently seeing, is some sort of pause in the market. Now, a lot of times what happens is when we create a sweep, especially one that was very aggressive like this, when you see something like that happening, usually that's going to be a V-shaped recovery. And what that means is that usually on the pullback, price is not going to actually come back to that sweep. Price is actually going to create an opportunity for an entry like this somewhere below, which is going to be a lower time frame flip. And so that's kind of what I'm looking for. So at this moment on the 1-minute time frame, well, if I was going to take an entry here to cover myself, would be a little bit more than 3 pips minimum. That might be a little too much for me. So I'm really watching to see when I can see some sort of level of interaction holding on the seconds time frame. So this is once again what we're doing. So I'm just trying to see some liquidity taken somewhere. All right, perfect. At that current moment, what do we have? Price takes the low, price then takes the high. Now I have this demand that has formed. Now these are all on the 5 seconds, so this, I know it sounds kind of funny, but these are really lower time frame. So at this current moment, what we're seeing here is this is a shift. Price takes the low, takes the high, and what usually happens after that? If we take the low, that's going to be our entry. That makes this strong, right? And then what are we following? The same kind of routine here. If we see something like that happen, right? This would become strong. So that's kind of the setup that ends up happening. We go back here. Let's look at the second screenshot. Same kind of thing here. So let's go back. Okay. Bar replay, 5-second time frame still. All right, we take the low. We leave a gap. So that's showing that we cannot fulfill orders at those prices. This then becomes strong. This is a liquidity POI. So now I can look for an entry to take this area as my supply. Now price at the current moment is down there below. This swept liquidity. So we can mark this as a liquidity POI. Here we add liquidity swept. And all we need to do is to cover that high. So we can enter somewhere like here. And that could be pretty aggressive. So then bar replay. Price pulls back in. We're entered there. Let's see if this lines up. Okay, awesome. Price comes back in. Let's see, make sure it holds. Perfect. Then what do we have? We actually sweep again, but that's fine because we're covered in here. So we have double sweep, liquidity swept, and perfect. That's our entry as price is falling down, right? Or as price comes into that level. And then we're just going to be patient. Perfect. We have confirmation of that level. This area, very likely price could come back to retest this. We go back to the 1-minute time frame now to manage our trade. On the 1-minute time frame, what do we see? We see that we've left behind a doji candle. So this is a valid 1-minute time frame potential re-entry if price comes back. Right now, this is an incredibly aggressive trade, kind of as I already mentioned. We're trading this based off of a rejection after a sweep of a 15-minute structural high. Now, where's our target going to be? Well, speaking based off of this is the high that pulled back. This is the extreme of that pullback at the current moment. The first target would be here. This would be about 12R with a 2-pip stop loss. Now, at the same time, if we look below, we go back to, let's say, the 15-minute time frame, and to have an understanding of what's happening here. If we remember that we want to see price pull back to what? Premium price territory, or discount pricing, right? So discount pricing would be right here, minimum, right? So that could be a 27R trade. Now at the same time, we could have the understanding and say, look, this place might generate a weak reaction. All of this liquidity is still here. This extreme doesn't have any inducement, so we could even target this. That would be pretty aggressive considering the 4-hour and the 15-minute are bullish, but that'd be a 55R trade. That's fine, we don't necessarily need that. We could target this area as well and say that's a 34R trade. The way I decided to play this is what I did, is I used the top of this, considering this is a lower time frame range, a liquidity POI that swept. This is what I was targeting. So that's about 22, 23R. I think mine was 22.9, right? So that's a valid setup. Now, confirmation of that would be when this area goes, then that's going to be the actual follow through, and then we'll be fine. You could set a break even there. In my case, I don't like setting break evens. Let's continue to manage this trade. So let's go here. I have to move this to the side a little bit. Okay. And then let's bar replay this. Okay. So at the current moment, what can we see here? We observe. We have a 1 minute change of character now. If we look at this, let's zoom in a little bit closer. Well, what can we see here? So now that the 1 minute order flow has shifted bearish, this actually very clearly looks like a V-shaped recovery, as I mentioned before. A lot of times with V-shaped recoveries, we will not come back to mitigate that area. Sometimes we will just come back to mitigate a flip. Now in this case, very particularly, the buy to sell, here we have a level of interaction on a lower time frame, on the seconds time frame, that swept liquidity. Here, if we zoom in, let's hide this. Here you can see that what we have is we push lower, this sweeps 1, 2 candles, and then continues to the downside, directly gets engulfed, this doji. Now when we engulf, you can actually see that this is the area that directly causes a break to the downside. So 2 bearish candles, break on body. This is the source of the break, not the extreme. So very likely price can come into here. Now in my live trading that I recorded, I did add in a secondary entry that I had waiting here with a 3 pip stop loss. The difference was that somehow I guess my order was deleted, and I don't have screenshots because I entered that from my phone. So I actually only got this initial entry. I never got triggered in for the next one. So we can go ahead and manage this trade either on the 1 minute or the 5 minute. But we're just kind of waiting to see price break down. We know that's a V-shaped recovery. So we're just going to follow through with this. All right, perfect. This breaks. Internally speaking, we have this high, we have this low, right? Here we swept liquidity. So this is going to be a weak, this is going to be kind of weak, a weak high that later we can target. But at the same time, that means that this area failed to break to the upside. So this was the first target. First target is taken, and then we're expecting this to hold at the minimum before we get back to this area down here. So here what we can automatically start to see is we're developing 5 minute order flow ranges. We have this low, go across here. This area does not have any point of liquidity in it, so more than likely that's going to be swept in itself. Let's mark this out properly. Liquidity to target. All right, so this would be taken very likely, and then we have options here. We have this area here, could be an area that gets retargeted. We can get a reaction off of there, or kind of like I mentioned, this 1 minute zone, right? So that's more than likely a scenario that would happen. So let's continue going through with this. All right, once we break this, let's see what happens. Let's go with this 5 minute. We want to see how it closes, if it closes on body or if it closes on wick, to show strength or weakness. Okay, so we actually failed to close below, so equal lows. So now what that tells us is we have actually some liquidity here that we could sweep. So equal lows. All right, and so because this fails to break, this is still the swing. So let's keep watching. All right, let's keep going here. Let's see if we get any kind of reaction. Oops, wrong button. All right, perfect. Price comes in, provides a reaction, does not change character. On that time frame, we have this low that pushes into that area. Price comes back, holds. Internal order flow is somewhat bullish. Comes up, and then tap. Here we tap this initial entry order block. So if you did not get your entry during Asian session at around, let's say 4:30, which is about an hour and a half in, you could have gotten an entry at about 1 hour after London session. This is where I had my secondary entry set up that never got triggered. So you can see this would be a very valid place to get that secondary entry. And once this high is shown respect and mitigated, we use this as liquidity. What can we now expect? This area is going to be the area that's going to be targeted next. So we continue. Price moves with more aggression there. Here you can see that we leave behind this buy to sell range. See if price comes back to mitigate that. Does not. Boom. Take profit hit. So in this case, this trade hit take profit while I was sleeping. This trade lasted a length of about 10 hours and 55 minutes. So I was on the chart for about 1 hour and 30 minutes, entered the trade, and then I went to go run some errands after price action kind of was just holding on. And then we can see I went to sleep around 11 p.m. So I went to sleep around this time. So this is when I was already sleeping. Price came back, retested my entry, respected it. We don't have set to break evens, and price ends up 2 hours or 1 hour before New York Open actually hits take profit. So that's 22.23R. Nice clean trade. As I mentioned earlier, price wants to come back to discount pricing or to the extreme. So you can see that both of those would have been really good entries or really good targets as well. As you can see, both of those were hit. So that could have been it from a 23R to a 34R. And I believe, did that come into, I don't think it did, but that's still pretty close. Very nice setup. Price returns bullish. Very likely price wants to mitigate something like this, right? And then from here, we can either have continuation to the downside or understanding this is 4 hour, 15 minutes still bullish. This could happen next. So that's the trade recap that we have for today. Asian session 22R based on how I took this. Where was the exit? Somewhere around here. 22R Asian session 10-hour trade. I recorded 6 hours of this. Obviously, I'm not going to edit it, so I'm just going to put out this trade recap. So let me know what your thoughts are on this trade, and you can expect some more videos coming soon as I'm officially back. So have a wonderful weekend and enjoy the rest of your day. Talk to you guys soon.